I'm expecting, sure a lot of people are expecting a correction unless if we print out another few $1 trillion. And what's your perspective, your viewpoint from the housing market as compared to 2008 possibilities with the real estate?
I see it in the commercial side, not the residential real estate side.
Oh yeah, the commercial for you for sure, but shouldn't the residential be affected in some way from that too?
No, slightly, but here's the thing that you can't make up, and it's just simple economics. The demand is incredibly high, and the supply is incredibly low. I forget what the updated numbers are, but it's like we have like less than a 1 month supply of inventory. A healthy market, you need a year supply. We have a 1 month supply. So there's more buyers than there are sellers, essentially. And this is on top of having a rising interest rate environment. Obviously, they're about to come down. I was just watching some economists this morning talking about a cut this month. There's a slim chance that there'll be a cut this month. I think there's a really good chance of a cut in September. There could be two cuts this year. I'd give that a 50-50 shot. I think it's all but a shoe-in that there is definitely a cut right before the election. The Fed is very political. So I think they will do that to, somewhat stimulate. They're not supposed to, but they're humans. They can't help themselves. So all that to say, you've got a high interest rate environment, but you still have more buyers than there are sellers. Imagine what's going to happen if rates drop 1 point. You have millions of more people flood the market wanting to buy. So that's what I mean when I say residential. Commercial, you have the inverse. Because of COVID, a lot of businesses, like my own, even though I'm here in my commercial building today, it's really just a glorified man cave. We're mainly a virtual business, but we have a commercial space. I do content here and stuff like that. But anyways, all of these buildings, we just moved a month ago. Our previous building, 50% occupancy. This building, at best, 50% occupancy. The parking lots are half full. It's gotten better, but it's still pretty bare. And you think there's a lot of paper held by banks in the mortgage space. There's trillions of it held in the commercial space. And a lot of these owners of the buildings took 3-year ARMs. That's the typical way to finance commercial paper, is a 3-year ARM, adjustable rate mortgage. Well, what were rates 3 years ago compared to now? A lot lower. So when they adjust, and they are adjusting, they're adjusting big time. And they can't offload the paper fast enough. So there's going to be massive defaults on the commercial side, which is obviously going to affect banks. In a typical year, you'll have 100 banks fold. So when you hear things like Silicon Valley Bank and Republic Bank, that's normal. And in fact, even Silicon Valley Bank didn't fail. They're still operating. They're just a subsidiary under First Citizens, who technically bought their paper. So that happens on average 100 banks a year. I would say over the next 12 to 18 months, you're going to have 2,000 to 4,000.
Wow.
Yeah.
My goodness.
Yeah.
Which will change the entire banking industry, wouldn't it?
No.
No?
No.
I mean, it'll transfer over to the Chases and all that, who's going to buy up their debt out.
Well, that's what will change, is you have like Silicon Valley Bank, which was a decent-sized bank that had really, I wouldn't call it subprime paper, but their niche was loans to startups, angel rounds in Silicon Valley, SaaS companies, stuff like that. But they still had assets. An asset for a bank is deposits. And loans. Loans are assets for a bank, and depositors are assets to a bank. So you have banks like First Citizens, which was substantially larger than Silicon Valley Bank, that just bought their paper. And so when it happens, you'll see Chase, U.S. Bank, the Citi, PNC, these banks will just get even bigger. That's what will change.
Okay.
Yeah. So, if you're asking me to predict the economy, recession, stuff like that, I try to stay a quarter ahead. That's about it.
Yeah, right.
I mean, I would like to stay a couple years ahead, but
Yeah,
anybody
that'd be
that
nice.
tells you that they have figured it out, they would be multi billionaires, and they're not. They're just
Right,
guessing.
right.